Good morning and welcome to the SAE Investor Presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Graham Reed, CEO. Good morning to you, sir.
Good morning, everyone, and thank you for taking the time to join us this morning. My name is Graham Reed, and I'm the CEO of SAE. I'm delighted to be here today with my awesome colleagues, David Taff, our COO, Simon Hurst, our CFO, and Shaw Parsons, our Director of External Affairs. We hope you enjoy our presentation and leave excited about our business. We look forward to answering any questions you might have about our company. Since joining in 2021, we've overcome significant challenges. To do this, we set ourselves 4 clear objectives. The first was to create a streamlined business which can identify, respond, and deliver opportunities for the company. The second was to significantly reduce costs and improve efficiency, aligned around 2 business areas, which were Tidal Stream and battery energy storage systems. The third was to maximize the return on our assets at Usmouth and Maygen. And the fourth was to dispose of non-core businesses. These objectives have been achieved. However, we have a relentless focus on cash and operational efficiency. And you may know that in last year's audit, we received an unqualified going concern statement from our auditors, which we're very proud of. So, who are SAE? We're a major independent power producer, and we specialize in battery energy storage systems and tidal stream generation. We're leveraging our operational experience from the IPP work we're doing at Maygen and Usmouth power stations, where we've been operating for certainly the last 20-30 years at Usmouth and 10 years or so at Maygen. Our significant assets are the Usmouth Sustainable Energy Park, which is in South Wales, and the largest tidal stream site in the world at Maygen, which we're hugely proud of. Our business is aligned with the UK's binding net zero targets to ensure we're in harmony with the UK government's national objectives with net zero 2050. Our vision and mission are very important to us. They inspire our people, they get us out of bed in the morning, and they're effectively our strategy for success. Our vision is to deliver, own and operate sustainable energy projects for the benefit of our shareholders and our planet. And our mission on how we do this is to collaborate and innovate to reduce costs and successfully deliver our projects. So I've just got some high-level numbers here, or high-level stats around the specifics of our 2 main locations. So at Usmouth in South Wales, we have a huge site, circa 148 acres, and currently we've got 1.2 gigawatt hours of BESS, which has been consented. And our first project, which is 230 megawatts, we sold recently to Quimbrook Infrastructure Partners. We did the development piece, and they are building and owning that project. And we've got another an additional 1 gigawatt of grid connection agreements. At Maygen, we have the Maygen tidal array, which is 6 megawatts currently, and we've been really successful in the last 3 application rounds, AR4, 5 and 6, and we've been awarded an additional 59 megawatts to augment the 6 already in operation. And we have seabed leases up to just under 400 megawatts, and we've got consented tidal at 68 megawatts. In addition, to augment and support the grid connection of 287 megawatts, we have in development and in planning at the moment a circa 200 megawatt BESS, which is 1.2 gigawatt hours. So a lot for us to go at, and we're hugely excited about getting this portfolio built out, as you'll hear a bit later on in the conversation. So I'll hand you over to Simon now for the next slides.
Thanks, Graham. Good morning, everybody. I'll give you a bit of an overview of our financial situation and what we've been achieving over the last 3 years as a group. I mean, there's no doubt we've been on quite a transformational journey since 2021, when we had a successful equity raise and raised £2.6 million, which really stabilised the group financially and has allowed us to reposition ourselves to grow. And then since then, we completed 2 very important contracts, which have brought in around £20 million of revenues to the group. The first, of course, has been the sale of our first battery storage project to Uskmouth Energy Storage. They're the company that are going to actually build it, and we jointly developed it with them. And that deal completed in 2022, raised £10 million for us. And then following that, or in conjunction with that, we sold the land on which that project is being built for a lump sum, which was raised just under another £10 million. And that £20 million has been received throughout 2023 and 2024. And that's really given us a strong foundation, a really stable foundation on which to pursue the rest of our development opportunities. The third really important piece of work we've done during this time is restructure the timing of £13 million of bond payments to our bondholders. We raised around £13 million of money through these bonds back in 2017 and 2018, and they were due to mature in dates during 2022 through 2024. Clearly at that time, the group didn't have the cash to repay them, so we restructured the repayment schedule. Again, on a sliding scale, we start repaying those bonds at the end of 25, right through to 2029. And again, that gives us, as a group, the time to build out and develop the opportunities that we're going to talk about in some detail shortly. And then I guess all of that work really culminated in our 2023 annual report, where we were able to recognise the value of our battery energy storage portfolio. And we look at each of the projects, especially at Uskmouth, that we have, and we've attributed a value to each of those, and coupled with the opportunity in Scotland as well, we're able to recognise £75 million of value. So that report in 2023, along with it being an unqualified report, as Graham mentioned earlier, is really the first public-facing communications that we're able to give around, all the work that's been going on in the background. This is some data from our 2023 annual report, which really just reinforces some key messages around what we've achieved with the business. We're undoubtedly a much more focused and lower risk business now, much more focused. I say that because we're focused on our battery energy storage portfolio and our Tidal portfolio, and delivering returns from both of those. Also lower risk, our operating costs have dramatically reduced since 2021, predominantly through headcount reductions. So in 2021, we were running at just under £15 million per annum of operating costs, now down at around 5. And that, of course, includes discretionary spending for our development costs themselves, as well as the fixed costs around predominantly our payroll. We've talked about debt a little bit. You can see that's come down and now sits group debt, which excludes our MageN debt, which, of course, is non-recourse. So in other words, MageN debt that some of you may see on the balance sheet is only payable by MageN itself. It cannot be paid by the group. So the group, though, does owe the Abundance bondholders £13.7 million, and that's the principle that I've just been talking about has been rephased over a number of years. We are very lean now. Operating costs are low, and we're going to keep them low. Our strategy as we generate more opportunities is not necessarily to recruit more people on a full-time basis. We'll tend to buy in specific project expertise as we require it, whether that's planning consultants, certainly our legal resourcing, and or contract managers or specific project managers. and we'll do that as we add projects to the portfolio. And I alluded to this at the start, but what's underpinned all of the performance to date really is the fact we've been able to bring in £20 million of cash into the business. And you can see the revenue growth there in the bottom left-hand corner, £15.3 million last year. Our interim results this year, you will see recognising have received £7 million to the end of June for our land sale contract, and the balance of that income will come in during the rest of this year and early next. So we've really continued the strong performance from 2023 into 2024, and we look forward to building on that as we move into 2025 as well. So now I'll hand over to David, who's going to talk about the portfolio for us.
Thanks, Simon. Morning all. I'm just going to give an overview of our battery energy storage system portfolio and also our tidal stream generation projects. So firstly, starting on our battery energy storage system portfolio, just a bit of a high-level background. What is a battery energy storage system? Why do we need it, and how does it make money? So what is a BESS, which is the acronym for Battery Energy Storage System? Essentially, the battery energy storage systems consist of lithium-ion battery technology. These are the same batteries you'll find in electric cars. And what we do is we essentially procure these from large OEMs, and they're brought to site fully factory assembled in 20-foot shipping containers. Each shipping container consists of about 5 megawatt hours of batteries. So to give a bit of a feel for what that means, our first project, which is 120 megawatts, runs for 2 hours. So it's 240 megawatt hours. That will have about 50 20-foot shipping containers in order to fulfill that capacity. In addition, there's ancillary equipment for power conditioning and transformers for direct connection to the grid. So this equipment is supplied under long-term supply agreements. They're fully warranted and fully bankable supply agreements, and that's a critical part of our strategy. So that's physically what a battery energy storage system is. So how does it make money? Essentially, the BESS is directly connected to the grid. So a standalone grid-connected storage system. So what it does is it manages the supply and demand. So the intermittency of wind and solar can be balanced by these large utility scale batteries. And how do they make money? They essentially trade the energy. So when demand is low and generation is high, electricity is cheap, and our batteries then charge up to full capacity. This generally happens in the middle of the night when it's windy and everyone's asleep. But then as the morning time approaches and prices go up, our batteries then very rapidly discharge, and they make money from the difference in price in electricity trading. This function is something that we subcontract to third parties. There's optimization providers in the market, several very large PPA utility type companies who essentially will operate our battery on a 24/7 basis from control centers. They do that then and they'll offer us a guaranteed floor price. So the long-term forecast revenue streams of these batteries is very well understood from revenue models and is getting increasingly well understood as more and more batteries get deployed, to the extent that we can get guaranteed revenue streams from large PPA providers and fully backed by their parent company's balance sheet. In addition to that, we also earn revenues from capacity market. So capacity market is a contract we'll sign directly with National Grid. The capacity market is an insurance policy for the grid against future blackouts. Essentially, we're on standby should the grid ever have a stress event, and we get paid to be on standby in that way. So that's, again, another fixed revenue stream. So in terms of our overall revenue stack, about 50% of them are absolutely fixed and contracted and guaranteed. And when you combine that with a fully risk-wrapped EPC, fully warranted long-term supply agreement, that makes it a very investable and very bankable proposition. And that's a very critical feature to understand about this type of project. So why has battery energy storage systems suddenly become viable at utility scale? What's been happening is that there's been significant drops in the price of batteries over the past few years due to oversupply of cells from China. And combined with that, the long-term revenue streams are becoming, as I said, more well understood, and they look very attractive. So overall, there's huge interest from equity and debt capital in investing into this sector. So the last 5 years has seen a steady rise in investment in utility scale batteries, and that continues to grow. And as well, the suite of contracts are getting more and more mature. We can also raise project finance, significant amounts, and this enables SAE to be able to fund these projects and retain significant ownership through the equity carry that we've earned through the development phase. And we then invest into these batteries alongside strategic partners. So that's what, why, and how. And next slide. So this describes the market overview. Really, this slide is setting out the need for batteries. This is a graph prepared by Modo Energy, who are leading market consultant in BESS sector. So this graph shows the need for batteries for national grid. There's about 60 gigawatts needed to be able to reach net zero. So put simply, the UK cannot achieve its net zero targets without a massive increase in the amount of BESS systems being deployed. There is just simply no other technology that can match the huge need of intermittent generation with demand as efficiently or cost effectively as BESS. So the real question is, how quickly can we deploy this? And this is where you get different points of view in the industry. There's a huge amount of batteries in the grid connections queue, as is well reported, hundreds of gigawatts. So it might lead to one, and might easily lead for one to assume the market could easily get saturated. The reality is that the rollout is constrained by many factors, which is the availability of grid connections, the availability of suitable land, infrastructure, whether the batteries are in locations that they can get planning permission, and whether the developers have the experience to actually build, own, and operate them as an IPP. And these are the areas that we have really got a competitive advantage, as I'll come on to in a moment. And the other aspect of this graph to also focus in on is the duration of the batteries. The initial duration of batteries as has been installed at the minute is 1 and 2 hour duration. These are the durations which are essentially just looking at focusing on getting the revenues from the absolute troughs of the pricing during the day and discharging the batteries at the absolute peak. So you're making that maximum differential in energy pricing and maximizing the revenue stream from it. As batteries get cheaper and cheaper, that differential of pricing and the amount of revenue you need to earn actually drops off. And this is what enables longer duration batteries to start become viable. And what we've seen over the past year is that viability has massively improved. So there's a huge growth opportunity, as this graph shows. As we get into the darker green sections, we can start deploying 4 hours, 6 hours, or even 8 hour batteries into the 2030s. So the key thing to recognize is that all SAE's projects are being designed, developed with spare land and planning in order for us to capitalize on this opportunity. So once the market is ready, we will deploy much longer duration batteries. We'll double or even treble the capacity of our plants, and we'll increase the revenue streams and the returns on investment from these projects as we do so. So yeah, I mentioned the competitive advantage. So why is it taking so long for these batteries to get deployed? It's because the sites do not have the infrastructure needed. So they need to build massive overhead lines, huge amounts of road infrastructure. They maybe are not in the ideal locations from a planning perspective. This is the advantage that USCMAT brings for SAE and our shareholders. At USCMAT, we own the land, grid, and all the infrastructure needed. It's an ideal location for battery energy storage. We've got the site and infrastructure, and we are the freehold landowners and we can develop around 3.5 gigawatt hours of BESS in this site and are actively doing so. The first BESS in the site, in fact, is already under construction. The second one has already received planning. The site is very well supported by the local planners and very favourable from a planning perspective, because the type of project we're installing is very similar to the type of industry that was previously on the site, as it was a power station. And in that power station, we've retained the operation and maintenance team who have all the local knowledge, who understand the grid connection regime, understand the environmental constraints and requirements of the site, the health and safety requirements, and have good relations with the supply chain. So we're in an excellent place to rapidly deploy batteries, and hence we've got an ability to supply the need quicker than our competitors. So this map here shows the location of our key projects, which are the green one at the bottom is the one that's already under construction. We sold to UES. And at the top, we've got the 3 AW projects. AW stands for Avon Wisk, which is the Welsh name for the River Usk, which runs around the site. So AW 1, 2, and 3 make up 718 megawatts of BESS, which we're planning to build on and operate as SAE. And this map also shows the location of the National Grid substations. So next, I'm going to play a short video for you now. So it's a picture paints 1,000 words, and this video will really help to bring the scale of the site to life and show how much of a great asset the Uskmore Power Station is for SAE and our shareholders. So this video is a recent drone flyover of the site. I'll just pause it here to discuss a small bit of what you're looking at. So in the background, you can see the River Usk. Just in front of that, there's a U-shaped concrete foundation. That was the previous site of the cooling towers. Essentially, what you're looking at is these were the previous cooling tower water basins. These were previously used to store the water to cool the power station, and is all that remains of the cooling tower. So we've already invested heavily in the demolition of that site, and that's the site that we're now rapidly approaching financial close for a 120 megawatt BESS system. In the foreground, where you can see the immediate foreground, that's the AW3 project, which has enough land. You can see a huge amount of land there for 350 megawatts. I'll keep playing it here. Yeah, so you can see the scale of the site. This is a 148 megawatt site. All the land is owned by us. So this is where you can see the existence of the National Grid infrastructure. What you're looking at here is a 275 kV outdoor switchgear substation. So a lot of other projects you will see who are trying to deploy BESS just do not have this infrastructure on their site. They need to wait for long lead times. They need to wait for all the consenting for the overhead lines. This is all in existence in Uskba and ready to be repurposed and connected into a BESS system. Yeah, and the final part of the video, we just do a bit of a flyover of the entire site. So you can see here the overall scale of the site is, say, 148 megawatts, 148 acres, sorry. And we've got here just on the right, you can see our first project under construction. This is the one we sold to UES, which has initially been built at 230 megawatts, and there's another 120 megawatts planned to be expanded on it. In location of the chimney and around that land there, we've also got space for another 250 megawatts, which we've got a grid connection agreement for. So the scale of the site and the opportunity we have at hand is absolutely enormous. So if we just come back to the presentation. So really, just trying to put some numbers on all of this to help just quantify the opportunity. So this is really showing you the capacity and the grid connection year of all of our projects. First two projects at the top have been developed by us, as I said, I was described earlier, but they have already been sold. All the projects below that line are the ones that we are actively developing and we plan to build, own and operate. So in less than 3 years, just to put it into context, SAE have created a 2.6 gigawatt hour BESS portfolio, and that's on a 2-hour basis. That portfolio can be expanded and almost doubled out to 4.8 gigawatt hours once the market is ready for 4-hour duration. So we generated significant income for the first two projects, and they continue to provide income to the group as there's an expansion project. And we continue to create value for as each project moves through each stage of the operations. We will earn revenue from these projects. So yeah, what does it mean in terms of value creation? Really, what we've recently announced, very proud to announce that we've acquired all the rights of the AW1 project on the 7th of August, and we described some of the economics in that RNS. So that project is currently going through the full final development phase, and we've estimated a cost of 65 million to build it, and is forecast to generate 12 million per annum and 9 million EBITDA. So this ties back to what I was saying earlier about the very strong investment case these projects present. Running financial models in these projects, they're showing internal rates of return in the range of 12 to 15%, it's a really attractive investment proposition. But not only that, they also can attract a high level of gearing, so we can raise project finance for these projects because they come with a bankable suite of contracts, bankable supply EPC contracts, and also fully floor priced PPAs. And we're building this with a very experienced team. We at the same team and management team who've also been involved in the Maygen projects, as Graham mentioned earlier on. The table then also extrapolates that out. What does that mean for the rest of the portfolio? So the four projects we've listed here are the ones we plan to build, own, and operate. A lot of these are coming online pre-2030. So what you're looking at here is, when I add up all the CapEx and all the annual revenues on this page, we're looking at a CapEx ticket of about £400 million. But that'll generate for the group about £100 million per annum. And that's on a 2-hour basis. That's before we even move to the next development opportunity we mentioned earlier. So once we move from a 2-hour capacity to 4-hour capacity, that revenue is expected to go from £100 million up to £150 million. So really, the scale of that opportunity is absolutely enormous. It's hugely exciting, and we're absolutely committed to getting these projects built, and is a game-changing financial outlook for the company. So that's everything that we have for today on batteries. Just moving on for a brief update on our tidal stream business. So tidal stream, again, just for the basics, what is tidal stream? I guess that many of our shareholders will know quite a lot about it, because it is our heritage. It's where we sort of cut our teeth in the power sector. Our tidal stream project in Maygen is something we're immensely proud of. We've already deployed the largest tidal stream deployment in the world at 6 megawatts. It's already generated 68 gigawatt hours. We've been operating that reliably for 5 years now. The concept really is that they look very much like underwater wind turbines. They're deployed from DP vessels onto substructures. This graphic shows gravity-based structures, which is what we used on phase 1. We're planning to move that to more pin pile structures in phase 2. So once you deploy the turbines onto the gravity-based structures, they divert cables back to shore through horizontal directional drilling. The power is conditioned onshore, so as much of the equipment as possible is retained onshore. That's one of the differences between a tidal turbine and a wind turbine, which helps improve reliability, and then onward to the national grid. And then it makes revenue. It's got subsidy support from the government. Previously, the phase 1 array has got ROC support, 5 ROCs per megawatt hour, and the future phases are now strongly backed by the UK government. They've now got ring-fenced CFDs, which we've been participating every year since that's been announced quite successfully. So Maygen is the world's largest planned tidal stream project. It's a 398 megawatt seabed lease. We've got 86 megawatts offshore consent and a very large grid connection agreement. It's produced 72% of all UK tidal energy production, and that stat is improving all the time as we're generating 1 gigawatt hour a month at the moment. And when the next turbine goes in, that'll increase further. So 67 gigawatt hours produced to date is a phenomenal achievement. And we've also, in the development phase, been extremely successful as well. We've secured 59 megawatts of the CFD's capacity over the last 3 years. And that goes to show really how good a resource it is at this site. This site can compete with any site in the world, really. And what we've done is we've secured almost 50% of the budget available in the tidal industry over the past 3 years. And what the future phase also provides is another huge revenue and funding opportunity for the group. Is a 59 megawatt array we estimate would generate in the region of 32 million revenues per annum, which obviously diversifies and adds to that 100 million per annum revenue stream which we're targeting for the BESS portfolio. So thank you for listening. Yeah, that's the end of my bit. I'll pass you back to Graham to wrap up the slides.
Thank you, David. Well, I hope you agree that we're in a very exciting place in our company's evolution. You've heard from the team around the finances, the changes we've made, the journey we've been on. You've heard about our projects. You've heard that we've got really early access to the battery storage space. We pivoted from what we were doing at Usmouth into batteries a couple of years ago. We're going to be operating BESS projects from 2026. And as David mentioned, the early adopters, the people that can bring their projects to market sooner, are going to be the winners in this race. We have a strong pipeline of projects, as we've again walked through, with exceptional revenues over the coming years, which are quite astounding when you look at them on paper, when you consider the size of our company. But they've also got the built-in expansion possibilities that we talked about. As the market changes, we will augment them from 2 hours to 4 hours to 8 hours, and maybe even more than that. Simon covered around the lean organization. We've got very low working capital demands. It was a strategic decision we took very early on to cut down our burn rate, especially when we were challenged, in 2021 for the first couple of years before we got things back on track. We have an experienced team, 4 of whom you have met today. And they're a team that I think are doing an awesome job for our shareholders and our stakeholders and the environment. And we've got a medium-term growth opportunity from our Tidal stream, which, as David said, was our heritage, and we're super proud of what we've achieved to date and what the potential is moving forward. So I'd just like to thank you for attending today, and we look forward to answering any questions that you might have. Thank you.
Graham, Simon, David, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions. You can do that just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. We have received a number of questions, both pre-submitted and throughout today's live presentation. And Sean, at this point, if I could hand over to you to chair the Q&A, that'd be great, and then I'll pick up from you at the end.
That's brilliant. Thank you. And hello, everyone. So I'm just going to start off, and thank you so much in advance for your questions. There's some great ones coming in, and we'll do our best to answer as many as we can today, and then we have scope to answer and follow up with those that we aren't able to get to. I was going to start off by asking you, Simon, some questions we've had come in, which has been really positive around such an exciting and large pipeline of projects. But the question is do we have the cash in the company able to deliver that pipeline?
Well, yeah, short answer is yes. I mean, we're a fully solvent, stable business nowadays, and as evidenced by the last audit opinion we received. So we got no issues around funding the business going forwards. What's going to happen in terms of the big capex requirements for these projects is, we'll be raising debt and equity investment from the markets to help fund most of the initial project, at least the first one, with a contribution from SAE. So, and that's typical in this space, project finance for these large capital intensive projects. So, yeah, we're in a really good space at the moment.
That's great. Thanks, Simon. And one of the other follow-up questions we had was around, it's great to have that ability to deliver these projects, but one question was around how we are managing the increasing costs that so many are facing, including ourselves, around staffing, but also development costs.
Yeah, okay. So, well, staffing costs, we've got a really tight handle on. We have a headcount of 13 at the moment, which is very lean. And as I said earlier, we buy in specific expertise as and when we need it. We don't anticipate any significant increase in headcount, in full-time headcount. So we'll match our resourcing with the projects we're developing. And then when you think about the development costs themselves, we see, I guess there's 3 tranches of costs we see. There's legal fees to support delivering the commercial side of the project. Those typically are back-ended when we reach financial close. Planning fees and so on, which we do need to spend at the outset. They're fairly settled, to be honest, and reasonably stable. We're not seeing a huge amount of inflation in that area. And then any additional resource we need, which, yes, it is a cost, but in the context of the total capex of these projects, it's not material.
Could I just build on that a little bit and just to say that, when we do embark on a development project, then a combination of David working with Simon will produce a budget that is effectively what we are determined to spend, or we determine is required to be spent to bring the project to financial close. And then they will ruthlessly manage that on a monthly basis to make sure that we stick within those budget guidelines for that particular project. So we're absolutely on top of the cash management.
Thank you both. Graham, if I can just ask you a question, please. And that's around, we've had a couple of questions on these, so I'll combine them together, around using our expertise and our experience of Tidal at Maygen, and whether there's scope or whether we have plans to expand to other projects around the world or to help other companies in their delivery.
Are you talking specifically Tidal projects?
There's one on Tidal. The other one is around, it's generic, but are we going to look at other sites more broadly, or are we focused on what we've got?
Yeah, I mean, we're absolutely focused in two business streams, as I've articulated, and the team has as well, and that's battery energy storage systems and tidal generation. I don't see that changing in the short term. If it's appropriate, because other technology comes around that we think could augment or work well with our skills and expertise and the assets that we own, then we would give it some consideration. But if you look at our project portfolio, starting at Usmouth, 150 million pounds revenue per year when we build out those projects to 2 hours, to 4 hours, I think it was, and it was 100 to 2 hours. I mean, that will just increase. And also getting Maygen 2, phase 2, phase 3 over the line is very important to us as well. And with all of that and the size of the business that we are, that is a huge amount for us to go at. So I don't want us to start scattergun approach when it comes to project development. We are talking to people with other sites that will support what we're doing. But, we absolutely must be ruthless around being focused. There's a great saying which we live by, which is the main thing is to keep the main thing the main thing. And that's what we're focused on. So it's battery storage and it's tidal, and it's in the UK at this time.
Thanks, Graham. David, I was just going to move to a question on you. I think there's general recognition that the addition of MayBESS is fantastic to have a project just beyond Usmouth and the opportunities to utilise our experience there. Are you able to give a bit more clarification on the relationship and role of Scottish Enterprise in that project?
Yeah, sure, no problem. So essentially, Scottish Enterprise were originally a legacy shareholder of the Maygen project. So they're a 16% minority owner of the Maygen project. So once we came to the idea of utilising Maygen's grid connection for a BESS system, it only makes sense that they would retain that same ownership of the project, the BESS project, because we're utilising Maygen's grid connection. So it's as simple as that, really. It's a continuation of the ownership they had in the assets that we have up at Maygen.
Thanks, David. You covered this a bit in your presentation, but I just wanted to come back to you as well around the state of the BESS market, and specifically, we've had a question around what's happening with the cost of BESS and how that's impacting our plans.
Yeah, I mean, the cost reductions this year have been absolutely phenomenal. We've seen it since we started tendering at the start of the year to where we are now. We've seen over a 30% reduction in the cost, and it actually shows no sign of stopping. So I think, as I mentioned, last year there was sort of a lot of people on the fence as to whether any longer duration lithium-ion projects were viable. The rhetoric now has moved massively, and that long duration for lithium-ion is absolutely possible if the capex reduction keeps going in this trajectory. So yeah, it's and that again is bolstered the economic case for batteries, and the economic returns are very healthy as a result of these reduced capex.
Thanks, David. Simon, just on the finance side again, we've had a question here, and again, I know you had some in your presentation around the estimate for earnings for the company. The question is basically asking just that, is can you just give a little bit more or a summary of what are our earning potentials in the short term?
I guess there's a couple of things are going to happen. As we develop these projects and start building them, the values we attribute to them will increase the closer we get to actually operating them. But and that in itself will support the balance sheet. When we start operating the first project in 2026, as David mentioned, we're looking at £12 million of revenue per annum, around 9 million of EBITDA, and that some of that will go to repay debt. Other part of it will come as distributions to the group. So that will boost our earnings immediately. I think if you look at our earnings valuations at the moment, when we closed the year on the balance sheet, we had net assets of around £40 million, which compares very favourably to our market capitalisation, which is sitting at around 15 right now. So we think there's quite a big disconnect in that respect. Our earnings and the earnings potential far outstrips where we are with our market cap at the minute, and we see a very positive outlook. And if you refer back to independent investor notes that have been written on the business earlier this year, that bears out that assertion as well.
Thank you, Simon. Graham, we've had some questions around Proteus and our relationship there. I've got two questions, so I'll start with the first one, and that was around, with the sale of Proteus, do we still have ambitions as a company to be a manufacturer of hardware in the future?
Well, the simple answer to that is no. We sold Proteus because we didn't see that as an area that we wanted to continue to develop. We also, at the time, as I think I mentioned, one of our key priorities at the outset was to divest ourselves of non-core businesses, and that was what we did with Proteus, because we couldn't at the time even fund what they were doing. So for us, it was a win-win. Proteus management bought the business, we retained a small stake, they got external funding, and we got access to the technology that we had developed. Had we not been able to sell Proteus, then that business would have been shut down and we would have lost our access to turbines. So the relationship we have with Proteus is an excellent one, but it is one of a supplier-owner type relationship. So we will buy turbines from them at the appropriate time, and we will work with them when it comes to helping them develop their turbines through the sites that we are operating. But also, we mustn't lose sight of the fact that Proteus do assist us very carefully with the maintenance of the turbines and the deployment and redeployment of turbines as well. So we have a very strong relationship with them, but they are an independent organisation.
Thanks, Graham. And actually, the second question fits in really well with that. Are you just able to explain our holding in Proteus and specifically around the reduction down from 21 to 11, I think is the question, the figures quoted here?
Yeah, I mean, it was all part of the original deal that we did, and it's part of the negotiation of the commercial settlement that our shareholding would be reduced to 10% after a period of time. We don't have any voting rights on the board. We don't access any profit. We're just there as a silent shareholder to give us, some form of leverage if that's required to, maintain the relationship. But the relationship it's very symbiotic. Our success is their success in Tidal and vice versa. So it's really important that we maintain that. But that was just the commercial decision we took at the time.
Thanks, Graham. I'm going to stick with Tidal, and David, I'm just going to come to you next, if that's okay. Talk about it. Just quickly, I've had a question just asking about the research notes that, Simon, you referred to. Just to say their notes were released by Longspur Capital and Zeus, and there's links available on our website. If you are able to go to that, you'll be able to access them through that. David, on Tidal, we've had just some questions around the 4 turbine and its redeployment, but also if there's any milestones leading up into next year that we can be expecting.
Yeah, sure. I mean, so the 4 turbine is all but ready to go back in. So that'll be redeployed in the very next available opportunity. And then we'll be back up to a full 6 megawatts of generation. As I mentioned earlier, we're already generating 1 gigawatt hour a month. So that 4 turbine going in, it'll bolster that revenue. even further, and get the array basically operating as originally intended. So the other part of that question, sorry, Sean, was.
So it was whether what milestones we've got upcoming that people can expect into next year. Thanks, David.
Yeah, so I mean we're running obviously a full development program with the Maygen 2 project. Maygen 1 now we've fully predicted that it should just go in and operate for many years reliably. So that's sort of, we've ticked the box with that and we've proven the concept. The focus now is entirely on Maygen 2, is working with our supply chain to get EPC contracts in place, to make sure that they're bankable, to look to raise the finance needed to build the 59 megawatt array, and also look to future allocation rounds. So we've been successful so far. We've got 59 megawatts, but we've got 86 megawatts of consent. So we'll be looking to fill that up, and all of that can be part of the Maygen 2 project should we be successful.
Thanks, David. Graham, I'm just going to come to you now. So people are really liking our new vision and what you set out in your presentation. But we've had a question here saying how the vision it's quite broad, and whether you could be a bit more specific around the technologies we are going to focus on.
Sure. At the outset, I've tried to stress that we are a focused business, and we're focusing on battery energy storage systems and tidal stream. So everything we talk about within our vision around sustainable energy projects for the planet, etc., and our stakeholders is through those two current technologies. As David, I think, fantastically presented, the depth and strength of our battery portfolio and our tidal portfolio is immense, and the potential revenue that we could generate from those projects is immense. But we have to stay focused. We are a small company. We are, to some extent, we move at the speed we can move because of the cash that we have, and we have to be very, very careful to make sure we get the maximum ROI on every penny that we spend in development. So whilst I know it might be exciting to go and do other things, we're not. We're focusing on batteries, and we're focusing on tidal, and we're focusing on those at the moment in 2 locations in the UK only. That might change, but at the moment we've got to get these projects away, built, get those fantastic revenue streams coming into the company. Cash gives us choice and control, and then we could look at being maybe diversifying sometime in the future. But at the moment, I want to stress we're focused on what we're doing now, and that's tidal and batteries.
Thanks, Graham. And I think that I'm going to pivot to one of those sites in Uskmouth, because we've had quite a few specific questions around the site. One of them, and David, I'm going to come to you for this one, but a specific one asking about the chimney and the works required. So on the video, which was brilliant to see, we've seen how the cooling towers have come down, but we've had a specific question around is the chimney and what other demolition works would we need to do to fit more on site?
Yeah, so I think it follows exactly like you suggested, Sean. It follows in the exact same way as the cooling tower. So what we would do first is we will get our planning permissions secured for the projects first and foremost, because that justifies we've got all the project rights in place to make the investment necessary to actually demolish it. So what we did with the cooling towers, you will have seen exactly in January this year we got awarded planning permission, and we immediately invested in demolishing them, and the site team did a fantastic job at taking them down in a very safe way and clearing the site ready for construction of the AW1 BESS. The chimney and other buildings around the site that you'll see dotted around, we have got quotes from demolition contractors for taking them down, and that would be all factored into our DevEx budget at the point in time that the project was ready to take them down, which would be naturally once the projects get planning, all the project rights are in place, so it's been de-risked. Then we would make the investments in sort of enabling works for building the projects, if that makes sense.
That's brilliant. Thank you, David. Sticking with Uskmouth, but Simon, I was hoping you'd be able to pick this one up. And it was a specific question around the freehold value of Uskmouth, and if we've recognised that in our accounts?
No, we don't recognise the freehold value of the land. We recognise the value of the projects that we're developing, and we work out for each individual project based on its forecast income streams at a future point in time, how much those projects will be worth, and then of course there's discount factors applied to recognise the risk of getting from the early stage point of a project to actually operating it. So that's where the value comes from in the accounts.
That's great, Simon. I'll come back to Uskmouth. There's a few more there for you, David. But Graham, I just wanted to ask one of you, and it's around our relationship with our largest shareholder, SIMEC. We've had a couple of questions asking us to clarify what our relationship currently is. So if you could pick that up for us, please.
Sure. So SIMEC are approximately 29% shareholder in our business. That shareholding entitles them to 2 seats on the board, which they don't have. We had a conversation with them a couple of years ago where we said we felt it would be inappropriate for them to have seats on the board, and they agreed. However, we do keep them appraised on an ad hoc basis of what the business is doing, as you would with any shareholders. The relationship is very professional. It's very long distance. It's very infrequent. But as and when we need to discuss things with SIMEC, we discuss them. And we have what I would say is a very cordial relationship. They don't try and interfere. They don't interfere in what we're doing. They rely on us to keep them updated. And it's just very professional. And we don't really follow what's going on within SIMEC. So at the end of the day, it's a relationship that is just there, but we're at pains to stress to anybody that we're working with that we are an independent company and we make the decisions as a board for our company for the benefit of our shareholders.
Thanks, Graham. I'm just going to stick with you now. Just a quick question around. We really liked your points around the operational efficiency and the work that we've done as a business to really drive that efficiency. But people have talked about as we grow and as that pipeline grows, how are you as a CEO and us as a business going to keep a handle on making sure we maintain that operational efficiency?
Well, I think when you look at the experience and track record of the team, myself included, we've worked in big businesses, we've run big businesses, we've run billion-dollar projects. We know what it takes to run a business efficiently and projects efficiently. Our decision was taken very early on. Some of it was out of need because we had to cut our headcount, because we had to cut our costs to stay in business. But as we've moved through that cycle and we're in a cycle of growth, we have taken the decision to outsource a lot of things that one could potentially insource. And we took that decision because we're not yet at a scale where we can employ certain skills, whether that be finance, whether that be planning. We can't justify employing them full time because it's a part-time role. So until we get to a situation where we're at a scale that we can effectively more cheaply employ resources directly as opposed to externally, we'll continue as we are. So I see that as a transition. We're on a journey of growth, and it's all the time trying to keep your overheads low, trying to keep your fixed costs low, such that you can make the best returns that you can. But obviously, as you grow, you will end up bringing on board more full-time resources because that's just the most economical way of doing it. But when it comes to running projects, my team and I, we've run small projects, large projects. Sometimes small projects are harder to run than larger projects, but we've run projects, so project controls, commercial management, project reporting, cost value analysis, all that sort of stuff is bread and butter to us. And we've most recently demonstrated that on the build out of Maygen, which was built to budget and program. So I have absolute confidence that the projects that we build will be built on time and to budget. Thanks, Graham.
I think this is our last question, and David, I'm going to come to you and finish on probably our most exciting, which is the Uskmouth site. A lot of people are really seeing the potential, and having seen that video, I think everyone's got a grasp of the scale of the site and the scale and the opportunity that we have. moving on a little bit from Graham's and our focus, but a lot of people have asked, we've had multiple questions on this around what more could be done at site. Is there potential at that site to go beyond batteries and get into other generation assets? So David, I didn't know if you want to talk about long term.
Yeah, sure. I mean, just to build on what Graham has said, I mean, the opportunity at Uskma is absolutely enormous. We've got 148 acre site. We've got grid connection on the land. So we've got 3.5 gigawatt hours of batteries in development. That is a phenomenal portfolio in and of itself. So our focus is entirely, my team's focus is entirely on getting them projects built and operating and bringing that revenue into the business and doing it reliably, safely, on time and on budget. That doesn't mean that beyond that, once these projects are bedded in, these are 15 to 30-year projects. So they've got operating lives of 15 to 30 years, where every year we'll be focused on making sure we're bringing in them revenue streams. We're going to be operating as an IPP for 3.5 gigawatt hours of batteries at Uskma. So that is our base plan. That is our core focus. Above and beyond that is there's many concepts, designs we worked on through the years, and we've got them in the sort of we can look at them. We haven't ruled them out, but is not our focus at the minute. And once we get the revenues in and these projects bedded down, we might revisit and see what else we can do with the site. We rule nothing out, but the focus is at getting these batteries deployed.
That's brilliant. Thank you, David. And that brings the end of the questions. I've had one comment around access to the research note on our website. I've double checked and it's down at the moment. I'll pick that up afterwards. And later today, that should be back up and working. So we'll make sure that is available as a follow-up. That's it for the questions. Thanks, guys, for answering them so well. And as I said, if there's further questions, then please feel free to get in touch. And we're really keen to pick them up.
Perfect, Sean. Thanks for sharing the Q&A, and thank you all for answering those questions. Of course, the company can review all the questions submitted today, and we will publish those responses out on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which is particularly important to you all, Graham, could I just ask you for a few closing comments?
Yeah, sure. Thank you. Well, again, I'd just like to thank everyone for taking time out of their diaries to be with us today. I hope you can see the enthusiasm that we have for our business, and hopefully you can see the great opportunity it is. Our business, I think, is at a stage where we're in a fantastic position to capitalize on our massive project portfolio that we've talked about in depth today. You know, the need is there from government and national grid, you know, with the target for net zero 2050, they've got to get batteries on the system, you know, to balance and stabilize the grid. So the need is there, and we've got a great team that's going to make this happen. So just thank you again. And if there are any questions, you know, after the event, please don't hesitate to contact us. Thank you again.
Thanks once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SAE, we'd like to thank you for attending today's presentation, and good morning to you all.